So this is going to be a very fun video to make because I have not seen a single video on YouTube talking about how much they are losing in this current economic state in their portfolio. So I'll be the first one to do that as I'm the king of taking L's. Not only that, but while I was calculating my unrealized losses across all my portfolios, across all my platforms, I was literally shocked to a point where I was just sitting in front of my desk, in front of my computer, just laughing at my own portfolio. Now bear in mind that I could not reveal my full portfolio because then you guys would know how much money I have in my portfolios, and that would be like somewhat of an invasion of privacy, I guess. So without further ado, this is how much the unrealized loss across all of my portfolios, across all my platforms in this current economic state at the age of 21. Well, it's actually 20 because I've not passed my birthday yet, so yeah, 20. So let's move straight into it. Alright, bear in mind that these unrealized losses are all calculated from its all-time highs. So first off, from Interactive Brokers, the losing amount is $866.27. From Trading 212, the losing amount is $170.97. Stashaway is about 579.49 ringgit, so that is about $131.64 and cents. Yes. So moving on to Wahed, it's only about 49.62 ringgit, so it's about $11.27. So the total unrealized loss across all my stock portfolio is at a total of $1,180.15. So let's move on to cryptocurrency. Now this is my favorite part. This is probably going to blow your mind as well as it did for me. Alright, so first off, Huobi, the losing amount is $1,757.92. On Binance, the losing amount is $453.85. And for Luno, it's about $118.18. And in SafePal wallet, the losing amount of money is at a whopping $798.63. And on Pionex, the losing amount is at a whopping $297.62. So the total crypto unrealized loss across all my portfolios is at a total of $3,426.20. So the total portfolio loss in US dollars is $4,606.35, which is equivalent to 20,277 ringgit and 15 cents at the time that I'm recording this video. I was ready to work at McDonald's. Hello? Sebelum saya order, saya nak tanya satu soalan saja. Macam mana boleh kerja sini Kak?
Macam mana kerja sini, masuk dalam isi borang, nanti kat depan kita kalau ada menu available, dia akan ikuti terus.
Okay. Saya tanya saja. Okay. Thank you. So bagi saya satu medium fries tambah chili sauce. Itu saja. Wow. Losing this much of money at such a young age, but of course, fortunately, it is all just unrealized loss. It's still really crazy for me to know that I'm losing that much of money across all my portfolios, especially for a person like me who is only 20 years old. I don't think anyone is going to lose as much as me, or maybe there are people out there who are losing as much as me. Ha, noob! Okay, I was joking. Please don't unsubscribe. Moving on, is this a good time to enter the stock market or the crypto markets? Well, my personal answer for you is yes and no. Now, I know there's no definite answer. I'm not the smartest and I cannot predict the stock market, but here goes my explanation. I'm going to tell you why yes and why no. Definitely a yes if you're the type of person who are lazy to do research in whatever you're invested into, lazy to time the market, yada yada yada. The dollar cost average strategy will be the most effective way. That will be the most effective way if you're into passive investing, or maybe you're just a lazy investor. So not much downsides to that as well. Now this allows you to buy the top and the bottom of the market, so that allows you to maximize your returns in the long term. Because we know that trying to time the market is never really going to work out well for most of us, as we're not really any kind of professional. We don't have insider trading information. And of course, this only works if and only if you have unlimited cash buffers, or you have a lot of cash on your hand ready to deploy into the market, and you're able to dollar cost average consistently every single fixed amount of time throughout the thick and thin of the market, the top and bottom, all the way until this roller coaster ride is over. Not me though, I'm poor.
Broke people are one of three things. You're either arrogant, lazy, or stupid.
No, because you would probably catch a falling knife right now, and maybe the gains in the long term would not be maximized, because if you have limited cash buffers or capital on your hand, you would probably buy all the way to the bottom, and once the market dips below your buying point, you would be able to miss out on this opportunity, and then you would not be able to capitalize on that market gain. Capital gain, that's what I meant to say. Now, I don't know if a recession is going to happen or when the recession is going to happen, but according to online, the leading and most accurate indicator of a recession will be the treasury yield, and a lot of people are probably talking about it right now. this is probably not new to you guys as well. And according to the treasury yield, it looks like it's slightly inverting, somewhat flattening. If that happens, that means that the short-term yields exceeds the long-term yields. And that also means that we are in for an economic downturn. However though, that is not always the case. But the inverted yield also have predicted the past 7 recessions, such as the dot-com bubble, the 2008 housing crisis, and also the virus in 2020. So it's more of like a 50-50 kind of thing. There is no one way to say that yes, a recession is coming, it's inverted, you know. So this is how a normal yield curve would look like, and this is the yield curve right now. The longer the maturity date, the higher the yield. However, if the short-term yield is higher than the long-term yield, that means that people are not buying any kind of short-term treasury assets, as they have low confidence in the economy in the short term, therefore driving the yields percentage go up. Now the best part is here, or the most useless part, whichever you want to prefer. What will I be doing in this market? Will I be buying? No. Why? Definitely not because of treasury yield, but it's more towards my own personal feelings towards the market. Mainly the macroeconomics stuffs. I can list them all out, but it is a little bit too sensitive for me to talk about them on YouTube apparently. The reason why I said that is because I've been keeping up with the latest news, and there's just a lot of negative news all around the world. There's just too many uncertainties and a lot of negative sentiments, you know, affecting into the market. So that is why I'll be holding off for now. Now, I'm not trying to sound smart here saying that this is not the time to buy. I'm going to tell you guys when to buy. But the real reason behind me not buying assets right now is because I have limited cash and I'm just a broke kid.
You're arrogant, lazy, or stupid.
The only reason why I'm keeping up with this kind of latest news is to back up my theses and my actions of not buying to the markets for the time being, because I'm just broke. I just need something to validate my own decisions so that if anything were to go wrong, I miss out on any kind of lows, I can blame the markets instead. So ultimately, I'm just trying to play it smart with the limited capital that I have. I'm not trying to go too aggressive into buying or even selling. I'm just going to wait on the sidelines with cash in my bank account or brokerage account and see whether if anything is going right or wrong. Then I'll make my decisions from there on. So if you guys have made it this far into this video and have found this video very valuable, please smash that like button. And with that being said, I hope you guys are staying safe, investing safe. I'll see you guys in the next one. She must be wondering why am I asking for a job interview at 1 AM, like that's crazy.
Trying to work towards these blessings, but the devil keep interfering every